thank you, Governor, for agreeing to speak with ET now to explain the logic of the monetary policy that you just announced. Though, of course, the interview will go a little beyond the monetary policy. So I do hope you will enlighten our viewers about a lot of the thinking at the top of the Reserve Bank of India. Let me start by asking you that you described in one of the papers, the Economic Times, in fact, today, as an inflation warrior. Is that how you see yourself, as somebody zealously going single-mindedly in pursuit of the inflation demon, as it were?
No, I don't see myself as that, because there's so many other things we're doing. We're trying to increase the pace of reforms in the financial sector. We just announced payment banks, small banks, a whole variety of things we're doing to change the financial sector. So to argue that we're only focused on inflation and there's nothing else we're doing is, I think, a mischaracterization. But we are worried about inflation. I mean, I have repeatedly said that I think inflation is one of the biggest impediments to growth. And it is an impediment because it's standing in the way of savings, it's standing in the way of a stable exchange rate, it's standing in the way of lowering interest rates. Somehow people think that I have a wand, that I'm going to bring interest rates down and I'm the only guy who determines interest rates. No, the state of the economy and inflation determines interest rates. In fact, and I've kept saying this, if I reduce policy rates substantially, the banks are not going to follow suit and reduce rates because inflation is too high. So we need to bring it down. We've had some success, but it's too early to declare game over. I think we need to go much further in establishing a credibility for lower inflation. And I think people who are saying, okay, inflation has come down, time to cut rates, and we've had a bunch of people saying that, simply don't understand this is exactly what we did repeatedly over the last 5-6 years. Anytime we saw inflation coming down, immediately there's a huge amount of pressure to make monetary policy more accommodative, and we didn't take actions on the other side, on the real side, and again inflation started coming up. And so I've said, let's fight this fight once, finish it, and then move on, and then we'll have more stability. We can't be the only country in the world with 10% inflation, only large country apart from Argentina.
So are you setting your sights on 8%, 6%, or even further at 4%?
No. So 8 and 6 was set keeping in mind the fact that given the condition of the economy, this was something that was achievable without a tremendous reduction in growth. So that it's also time. If we do it steadily over 2 years, there's enough time to do it without substantially affecting growth. So at this point, this is all we have in mind. Let's get it down to 6. That's a reasonable level of inflation. That's much more reasonable than the 11.2 that we had last November. So we need to get it down to 6. Then, we can have a public debate. The government is going to weigh in on that, what the ultimate inflation goal might be. It could stay where it is. It could go down. The Urjit Patel Committee says a band, between 4 and 6. I mean, that is a debate one can have later on. But let's get some success now in getting it down to where we have to go. And we think this can be done without a substantial sacrifice in growth.
I think the question is not so much about the 6% per se, but how quickly do you want to get there? If you want to stick to your original deadline of January 2016, then what will it entail in terms of getting there? I think the anxiety is on that score. So is there a case for kind of rethinking that 6%, or is it sacrosanct both in terms of the number and in terms of the date?
See, we had a bunch of very smart people, the best monetary people in India, on the Urjit Patel Committee, and we had some outside, observers also. They thought that, 8 and 6 was feasible. We are now seeing that 8 is definitely feasible, which wasn't necessarily true when we started. So, given that 8 is feasible, I think it's premature to say that 6 is not. Let's abandon it. Let's think about something else. We are quite determined that 6 at the end of the year. So you're right that the time and the number are what we are trying to achieve. Of course, if some big shock buffets us off the path, we will have to recalibrate if necessary. But with normal shocks, we think 6 should be achievable.
But a lot of the RBI success, quote unquote, on the monetary policy and inflation front is dependent on what kind of buy-in you get from the government.
Absolutely.
And though you did mention that the government has committed to fiscal consolidation, I mean, are you really convinced about the government's ability, willingness, and to undertake the measures that are necessary to achieve that 4.1%? Because in the Indian context, monetary policy has always played second fiddle to fiscal policy.
Well, I think, I also think that monetary policy shouldn't use government actions as a crutch to abandon its responsibility. I've said repeatedly that the government has to do what it has to do, and we have to do what we have to do. If, the government has said we are committed both on the fiscal front, but also on the food management front. And remember, food management is a very big part of inflation in India. And I think the initial steps they have taken, including sticking to the 4.1, it would have been easy for the government to say, 4.1 was previous government, we can't do that, we have to recalibrate targets and so on. They didn't. So given that, I think we should give the government the benefit of doubt on the fiscal front, that they will do what it takes to achieve it, and there are plans to improve the quality of fiscal consolidation. For example, bringing in the GST, increasing the revenue base without raising marginal taxes. Those, I think, are important elements. The Expenditure Reform Commission that the government has suggested on rethinking the subsidies is important. If conditions continue as they are, a very big if, diesel subsidies can be dispensed with going forward. So, number of things which say that yes, we should give the government room to do what it needs to do. Food management, some steps have been taken, more need to be taken. Let's see how they play out. But I think government does what it does. We have to do what we have to do, and we have to work together.
Two questions. A, have you done any independent, back of the envelope calculation of whether the government's numbers are, possible at all? Are they authentic? How much credibility there is? Because the market doesn't buy. So have you in the RBI reworked those numbers to see whether they are credible and whether you can go by that, number one? And number two, if the government, for whatever reason, is not able to abide by the numbers, in terms of not on paper, but in terms of real, genuine numbers, then will the RBI have to overcorrect as it has in the past very often?
Well, I think the government has said that, it is going to achieve the target. Now, the question you're really asking me is, will the target be achieved through normal processes, or will there have to be a substantial correction later on, as was done in the last 2 years, through cutting back expenditures, etc.? And there was genuine cutting back of expenditures.
Not just cutting back, also in terms of deferring expenditure, and not really, the numbers are not really, what shall I say, the integrity of the numbers is very questionable.
The government has said that it believes in financial integrity and so on, and there is some natural spreading of spending that happened this year into next year. That happens naturally. The issue is it should not become excessive. We shouldn't take advance tax payments only to refund it immediately after the deadline has passed, so as to indicate a better government fiscal position. So the government has said that that is not what it believes in, and is going to maintain clean accounting. And I think we should, as I said, give them the benefit of doubt. If you do the numbers, of course, the issue is how strong growth is, because growth defines the revenues that come into government coffers through corporate profits, through excise, and so on. And we have to wait and see. We think the prospects of growth have improved in the last few months. From the industrial side, on the agriculture side, they have become more uncertain because of the initial deficiency in the monsoon, which has been made up. So that's the good news on the monsoon front. We have to see how this all plays out. Our sense is 5.5 is feasible. Whether it goes beyond that. If it goes beyond that, the government gets some headroom on the fiscal front. But it is an ambitious target. 4.1 is an ambitious target. Again, let me repeat, the government will achieve it if it does what the government has done before, but how it achieves it is what is important.
Because a lot of what you mentioned in terms of government's measures, those are all GST, etc., will play out over a period of time. Yes. Whereas 4.1 is what you have to achieve within this fiscal, of which we've already finished more than a quarter.
That's right.
In fact, the first quarter, the fiscal deficit is already 56% of your budget estimate. So is it realistic at all to expect the government and hold them down to it and plan monetary policy, formulate monetary policy on those lines? Well, or do you have a plan B?
Oh, no. You have to be careful that fiscal deficit number is not uniform through the year.
Sure. It's not one
quarter.
More than last year's.
Yeah, but to some extent, paying the things that come due at that point, etc. The spending is not a uniform straight line over the year. So be careful about pushing that 50% number. Remember, last year, towards the end, we said it had already exceeded 100% of the number, but then it came down after that because some revenues came in. No, it is an ambitious target. I'm not denying that the government's 4.1 is an ambitious target, but they have said they will achieve it. There are a number of things underway. You're absolutely right. Some of these measures are longer term, but also remember that we have to worry about the longer term fiscal consolidation. There, I'm fairly confident that India has the capacity to bring its fiscal under control, because we actually don't spend too much as a fraction of GDP relative to other countries.
Sure.
Where we do a less good job is in collecting revenues. So broad basing the revenue collection process, making everybody pay their fair share, broad basing the collection of indirect taxes. I think expanding the base is the way we're going to do it, and these new measures, improving tax administration, GST, all those will help tremendously, and I have no doubt that if we do all that, our revenues, our tax position should be far better. Last point I'll make, we don't calculate a cyclically adjusted fiscal deficit. Remember, the fiscal deficit we're talking about right now is at a down phase in the cycle. I think most people would agree that our current growth rate is probably as bad as it ought to get. We have to be better than this. So to the extent that our growth improves, our fiscal deficit, having achieved this in really bad times, we should find it easier to achieve further consolidation because our revenues will improve.
But the only problem with the concept of fiscally adjusted, cyclically adjusted fiscal deficit, business cycle adjusted, is that it's very difficult really to define where the circle begins and where the circle ends, because we are still arguing about when the Great Depression, whether it was 1929 or 1930. And with governments like Indian governments, apologies, is that it's very difficult for them to, it's very difficult for a central bank to prevent the definition of that cycle being defined in political terms. And so if you don't have an FRBM, which is much more tight than we've had in the past, it becomes very difficult for a central bank really to pin the government down, particularly because the Reserve Bank of India is also the merchant banker to the government. Yes. So you've intervened and allowed devolution of auctions at a time when maybe you should make the government pay the price for its fiscal imprudence.
No, so there were other factors because of these new bonds, old bonds, sure, etc., in the recent devolution. So I don't think you should read too much into that as, the Reserve Bank is now turning a new chapter in government finances. No, I think we should just leave it as a technical issue. I think I was not suggesting that FRBM targets be set on a fiscally adjusted basis, on a cyclically adjusted basis, because there are problems in measuring the cycle. I agree with that. What I was saying is, don't be too pessimistic about the fiscal deficit today, because we are at a low point of the cycle, and to that extent, as the cycle improves, as growth picks up, we should see some natural consolidation that happens. We keep talking about 2007 as a point when our fiscal deficit came down substantially. A fair amount of that was also on the basis of very strong revenues, because the cycle was strong. So we should keep that in mind. And the flip side also applies. When the fiscal deficit narrows because of those revenue improvements, we shouldn't turn around and spend it all.
Absolutely, which is what we did in the past. But that means you're not as cynical as journalists are and observers are about government's fiscal management plans, and you don't have a plan B as things stand. You're willing to go along with the government's numbers.
We always have plan Bs. We don't reveal
you
plan
don't
Bs.
reveal them, okay. But I do hope you have something up your sleeve. But to come to the question, Governor, of the RBI having to straddle two horses, growth and inflation, as it were, price stability. Between these two broad objectives, apart of course from financial stability and things like that, on which of these do you think you have a longer way to go? Is it growth that worries you more, or is it inflation that worries you more?
I usually would say, look, inflation, lower inflation is the way to grow, but I'm cognizant of the fact that the economy is weak. I think the latest signs suggests that growth is picking up. Not so much reflected in corporate profitability, but you see, early signs in the industry side. Electricity generation has been quite strong. If the monsoon is not too bad and agriculture plays a little bit of a part, not as big a part as it did last year, but a little bit of a part, I think 5.5 for this year should be achievable, but the path, the trend will be towards stronger growth. I have said repeatedly, I'll say it again, the cost of money is not the biggest impediment to growth now. It is a combination of subdued investment and to some extent subdued sentiment pre-election. Now, as the post-election stronger sentiment starts kicking in, one might hope, and early signs are in the automobile sector, there is some pickup. One might hope that that pickup becomes more broad-based, and so I'm a little more hopeful about growth. Now, inflation numbers have been quite good in the last couple of months.
Partly statistical, but
some of it is base effects, which is just plainly statistical. But vegetable prices picked up. Some of it is a seasonal pickup. Some of it is more than seasonal. We have to wait and watch and see as we go into August, September, October. Our sense is because of the statistical effects, inflation year on year will come down as we go to November and then start picking up. The key is how much it picks up after that. And if in fact all these forces of disinflation start playing in, hopefully the economy will be in a reasonably good position on the inflation front also. But right now I think we are probably, if you wanted to, 60-40 growth versus inflation.
Okay. Now, this government, you spoke about political stability and how the government is doing its bit on the supply side. It's been in office for about 2 months. How would you like to categorize your relationship with the government? Is it better with this government, relatively speaking? Can I pin you down?
No, you can't pin me down. I think the RBI enjoys a good relationship with the government, had a good relationship with the past government also, and we communicate on a daily basis. And it's, multiple channels. It's with the bureaucracy, which hasn't changed much. Certainly at the ministry level since the last government, but even the personalities who change. I mean, the dialogue is an ongoing dialogue. I don't think. We're a technical organization. We do what we need to do, and we try and explain and work with the government of the day.
Absolutely, but except that the advice must not fall on deaf ears, because you mentioned the fact that the government and the RBI are on the same page. That is not a statement that you made earlier. Of course, there's nothing which says that just because you didn't make it earlier, you didn't have a better a worse rapport or better rapport now. But is there anything in this particular setup which makes you feel that there is greater buy-in from the government on inflation control?
I would not term it as greater buy-in. I would say we enjoyed a healthy relationship with the last government. We enjoy a healthy relationship with the current government, and I won't put it as greater, lesser, or whatever.
Is there a greater concern about inflation? Let me put it that way.
I think there has been, across the political spectrum, concern about inflation. In fact, today, I think in your paper wrote about the MPs seeing the price of food in the canteen, suddenly recognizing that it had been subsidized for a long time and they didn't see the full price. Inflation is a concern across the board. And every government worries about bringing inflation down. The key issue that is often discussed is what is the relative impact of government measures versus interest rates. I think over time, as we see core inflation coming down, we have to recognize the impact of both government actions in narrowing the deficit as well as RBI actions in having an interest rate that is reasonable.
Okay, so it's just that I'm in today's scenario a little bit more confident about government doing whatever is necessary on the supply side, which makes it easier for you perhaps to handle the demand
side. I think the government has talked about its determination to do what is necessary on the supply side. Again, Some actions have been taken, but more have to be taken.
Okay.
I mean, let me give you an example that we've talked even in the previous government about selling grain to bring down prices. But we have to do it in such a way that it does bring down prices.
Okay.
And sometimes, there are statements made about selling large amounts of grain, but unless it's done in an effective way, it can have limited effect. So implementation is really what is key.
I think one thing that has kind of rattled markets really is about what the syndicate bank, the arrest of the chairman for taking bribes, etc. And it's gone back to the issue of corporate governance.
Yes.
And very rightly you defended public sector banks, saying that it's not as if you can tar all public sector banks with the same brush. And frankly, the entire issue of corporate governance, would you agree, is slightly overplayed, because you did have Ramesh Kelly and Global Trust Bank, which is a private sector bank, and exactly the same issues arose. So my first question is it very naive and simplistic to assume that public sector banks' corporate governance suffers because of the ownership? Or is that, does one need to take a slightly more nuanced view, in which case the Vijay Naik committee report, would that really be a solution where if you had a hands-off relationship?
Look, I think that a corporation governed by a strong board, which looks at the activities of the corporation, is really the best way you can get monitoring, right? That in some of these situations, the chief executive has to explain what he or she is doing on a regular basis. The board has to be informed, has to see what is happening, and the board is close enough to smell things going wrong and can act. Now, if the board is weak in a private sector entity, you can get malfeasance. If the board is weak in a public sector entity, you can get malfeasance. So I don't think the issue is of ownership, except in situations where there is influence over and above the board. To the extent that influence is exerted only through the board, and the board is made up of sensible, capable people, I think that you can have both kinds of ownership. Similarly, from the CEO's perspective, there should be a sufficiently long term so that the CEO can do what is right. And finally, I think we have to revisit the issue of compensation. That there is this sense that bureaucrat salaries should be the ceiling for salaries throughout the system. But if you have an entity which is largely being managed in a private sector sense.
But are the public sector banks really being managed because you ask them to do financial inclusion, open their branches, priority?
You're saying they're doing more in fact than that.
They do very much what are social objectives.
What I'm saying is, when you put somebody in charge of 4 or 5 lakh crores of assets, and you tell them that, okay, I'm putting you in charge, and there's the guy across the street who's also in charge of 4 or 5 lakh crores, but I'm not going to pay you anywhere near I'm going to pay that guy. I'm going to pay you the way somebody who's who's in the bureaucracy is being paid. That also has an impact.
That's a reason, Governor. You must be getting a fraction of what you would have got in the IMF. So that is not a reason, I think, for bank chairmen doing unethical things.
I'm not defending the unethical things. You talked about governance.
Yeah, governance.
I am talking about the fact that we have to have, and let me add the last, market salaries come along with market. I'm not saying it has to go up to market. I'm saying the differentials are so wide at this point. You have to pay a little more, but also you're talking about a compensating differential. People in the public sector do what they're doing because of a sense of duty. Absolutely.
And there are many things that are not monetized.
And I'm telling you, there are a lot of people in the public sector who do that. But what I'm saying is that if you want to, broaden the talent pool in the public sector and be able to attract people from the private sector to do these kinds of things, you have to constantly review the differentials to make sure that they're not going overboard.
Okay.
And that's where I think we have to revisit this sense. After improving board governance, etc. We have to review the sense that salaries in the public sector can never be substantially different from salaries in the government, because there are two different opportunity sets. And you're talking about compensating differentials. There are compensating differentials there also. So, I mean, don't get me wrong. I'm not justifying corruption by saying salaries in the public sector are too low.
So if you want to get the best, you have to kind of...
And I would say that accompanying a change, you also have to allow for more competition for these positions. Be able to draw in people from the private sector who want to give back themselves. And that way you will get talent into some of these public sector enterprises. So it's a package deal. It's not a one-off.
Except that if you look at both syndicate bank, the reports that a large number of NPAs have not been recognized and been deliberately understated, as well as United Bank of India. In the system of checks and balances, is there some onus that is also on the Reserve Bank of India that they didn't catch on to these kind of things happening if it was a system-wide situation? So does the RBI really need to beef up its own supervisory skills, particularly if you're thinking in terms of new players, payments banks, small banks? The number is only going to grow. So is there some onus on the Reserve Bank? Should the Reserve Bank look within also?
Look, we can identify where assets have been misclassified, right? But if there's a deliberate attempt to change the structure of a loan so as to go under the regulatory radar screen, it's very hard for us to catch that in routine inspections. In forensic inspections, we can. Now, in other words, we can't play cop. And that's why we've been saying that you have to improve incentives in the system. You cannot have a structure where this kind of behavior, is I wouldn't say widespread, but is present. So let us improve governance, improve the system. The best people in a position to catch this kind of behavior, not the criminal, but the sort of business malfeasance, is the board. The board is closest to the bank. It sees what is going on, sees a CEO who's not doing the right thing, but who's massaging earnings in order to present a different picture. They can take action. So we need to strengthen boards. We need to strengthen incentive structures for the bank CEOs. That's, compensation is part of that. It's not the only thing. So don't think that regulation and supervision will catch every one of these. We do catch situations where things have gone wrong. We do catch situations where things have been misclassified. But the system has also to remedy itself to work better. We're
talking about payments banks and small banks. I know financial inclusion is very big with you, as well as with the government. But my question is, are we really trying to mandate financial inclusion? Are we putting the cart before the horse? Because you have so many, we tried no-frills accounts, we tried lead banks, and you have so many of the accounts which are just lying dormant. So is it that when there is people require banks, banks will go, because after all banks are, as you said, commercial entities. So by forcing financial inclusion, quote unquote, through small banks, payments banks, are we really trying to just put old wine in new bottles, going back, visiting the same thing? And should banks really be instruments of achieving social objectives?
Well, it's a new definition of forcing when you say we're allowing more entry. I mean, we're not forcing anybody to enter. We're giving them the opportunity to enter and to do what they need to do. So we're actually expanding the possibilities, which I think is the best way to do it, rather than making a mandate.
Past experiments never succeeded. We tried local area banks, we tried regional
banks. Local area bank not having succeeded, I think, is an issue which I hear again and again, and I ask people, give me the data. Tell me why. We have one local area bank which is over 1,000 crores in assets. We have another which is over 100 crores in assets, and two are okay, doing reasonably well. They've made small loans. They've made, 6 were licensed, 4 are flourishing now. That's not bad. That's not bad. 4 are working, 2 are flourishing, 2 are doing okay. They're not basket cases by any means. They're doing reasonably. So in this, tell me what hasn't worked.
Couldn't the same thing have been achieved with technology and the existing structure rather than having new players? Because the fit and proper always is a question in the case of a bank. See, we're not talking about even with the case that was a problem with RNBCs, in fact, residuary non-banking companies, and we might have burnt our fingers, which is why we're trying to improve the regulation and supervision of the NBFC sector. So given the fact that the moment you are a bank, you become a very different entity, and things like lender of last resort, these things do, I mean, they are factors we need to consider. So could one not have achieved the same thing with technology and the existing structure, rather than risking a whole set of new players about whose, integrity, question marks could
the existing system hasn't done it, but they have the ability to do it. So banks and mobiles have been talking for 4 years. There is some progress, but not a huge amount. Now they're getting together and talking about coming together. But I'm sure the prospect of payment banks is helping, sort of concentrate some minds. So the notion that entry has no effect and we should keep out entry, I think is a wrong one. I do think we should allow different possibilities in the system. The existing banks have the existing systems. They can use technology. Nothing is preventing that from pushing ahead. That works, great. But if new possibilities such as small banks, MFIs converting into small banks, some NBFCs converting into small banks, some urban cooperatives down the line converting into small banks, if that does the trick, even better. If payment banks, with technology, payment banks are going to be very technology incentive. If they make a big difference, why not let them? So the point here is, this is actually the reverse of the mandate-driven inclusion. This is saying, let's create the possibilities and see what happens. And we're going to be careful. We're not going to throw fit and proper out of the window while licensing these banks, and we're not going to license 1,000 small banks.
When are your new guidelines going to come for the new banks?
Well, we have comments till the end of this month, and hopefully soon after we will put out the guidelines as well as a deadline for applications.
Do you have any date in mind?
We haven't formulated that precisely, but I'm hopeful that we should start the process of going through the applications by the end of the year or the beginning of next year, and come out with licenses.
So that is for your universal banks?
No, for the payment banks and the small banks.
And what about the original guidelines for universal banks? You said
we will look at those, but in terms of sequence, we'll do first the small banks and the payment banks. Once we're done with that, we'll look into new universal banks.
So the reason why I told you about financial inclusion mandating was the government is very gung-ho on the 7.5 crore accounts that they want banks to open. Now, have you given any unsolicited advice saying this is not the way to go?
No, I think we are always in conversation with the government. I think one should not completely minimize the value of saying this is what we want to achieve. And I think what that does is that it gives banks a confidence that there will be a network, for example, that reaches every Indian. So setting up payment processes, setting up some interbank interchanges and all that to achieve that. So when you talk about investment, especially when you talk about the benefits of a network, sometimes knowing that everybody is going to be covered by such and thus date is not a bad possibility to put out there. It gives people an impetus to invest. So we're not, and I think the government is saying, let's move towards this target, let's see what we can do. And here are the things, and what is important is the government is emphasizing that it's going to do benefits, direct benefits transfers through that. It is going to do some kind of a unique ID for the entire system. All those things are good things. And I think putting some kind of a deadline around that is saying by this time we hope to achieve everything and create an environment in which you can do it.
If I can shift from financial inclusion to something that is completely much more esoteric and external, you clearly are worried about external volatility. You said we should anticipate wider volatility. What are the kind of safeguards that the RBI is possibly thinking of? And in reserve accumulations clearly is one. But do you have any kind of number that you might like to indicate, at least in terms of a range? I don't expect you to say, okay, 350 billion or 400 billion, but some kind of a range in terms of number of months of import cover, what other safeguards, because ideally controls are best exercised at the point of entry, not at exit. That's what research seems to suggest.
We have taken a number of steps to try and make the inflows more longer term. On the debt side, as you know, we've now moved towards saying incremental investment should be 3 years in government securities. I think we feel comfortable with that number. So let's see on the flow side. Now, we also have been measured in the pace at which we expand debt limits. We want to, I mean, we're not going to be static on debt limits. We will keep increasing them, but at a pace we feel comfortable with, and make sure that we don't become overly levered too quickly. I think the best insurance against volatility is to have good policies. So when people keep asking me why I harp on inflation, I say that we stand out in the world with having such high levels of inflation. We should not stand out. It's better to look normal and to come down to the levels that every other country has. So one of the objectives of this fight against inflation is to secure the external front. And I think a big factor in stabilizing the rupee last year was the notion that we'd be serious about inflation and we'd bring it down. So there's no point, giving up that aspect of stability. But I also think the actions the government has taken on the deficit front, as well as the combined actions which have brought down the current account deficit, are all important measures. Of course, the most important in stabilizing perceptions about India was the elections and the stable government that ensued. So all these are positives. We have to build on them. And my hope is that I think the buffers, the reserves, are really a secondary defense. Your primary defense is good policy. Buffers are a secondary defense. We have plenty of reserves. We don't have a target, this is what we need to achieve or anything of that sort. Our reserve management is driven by limiting unnecessary volatility. Some volatility will be needed, even desirable in the rupee, but unnecessary volatility we try and limit.
So the fact that our current account deficit and the fiscal deficit improvement is somewhat contrived does not take away from the fact that it is, on paper, a better number.
You won't let go this suspicion about the fiscal deficit.
No, it's current account clearly because of administrative measures.
I don't think it's only because of administrative measures. I think two factors were important. One, the non-oil, non-gold imports also came down because of the weak state of the economy, which is not unrelated to also the currency. But the second important factor was the fact that our exports are picking up. And that those are important factors also in the current account deficit coming down. It's not just gold.
You've been governor for almost a year now, Dr. Rajan. So how does it feel after a year? How difficult has it been? Has it been better than expected, worse than expected? Has also some of the euphoria about you come down? Is the market seeing you as more human? And does that make you more? Does it make your task more difficult, or does it make it easier?
Well, I think the market has, I mean, I've had my 15 minutes of fame and now the market has moved on, which is a good thing because central bankers are supposed to be boring and do their job. And that's what we're trying to do. We're working on a number of fronts and I think we are certainly trying to reform the banking sector in a substantial way. We're trying to reduce the NPAs in a steady way. Of course, we've talked at length about the inflation front and the inflation framework. Financial inclusion is a very big area, but two parts of it that we don't spend enough time on is consumer protection. We need to strengthen that, and financial literacy. I mean, financial literacy is more than just running camps where we tell people this is what it is. It is about educating the population on the importance of savings, of investment, so that children as they grow up are better able to manage household finances. We need to do a lot there.
I don't know whether you'd agree with this, but a lot of us in the market who are closely watching your actions, I must confess, we feel that there's been a certain slightly nuanced shift in many of your positions, whether it's on FSLRC or the Basel III extension by a year. So would it suggest that there's nothing like being in the hot seat to really, make one look at things with a slightly more realistic kind of view?
No, I would put it differently. I would say the market sort of had an image of me based on coming from Chicago. This is a free market nut. He's going to do A, B, C, D. Well, if you look at my writing over the years, you will see it's always a nuanced position. It's always recognizing there are pros and cons of everything.
Okay.
And I don't think I've changed.
So you're just telling the market to get real. You're telling the market get real.
Well, yes. I mean, for example, in my committee report, there was a strong push within the committee. I'm talking about the 2008 committee, to take away supervision from the Reserve Bank by well-known opponents of the Reserve Bank. And I said no. That supervision is part of what the Reserve Bank does. It is not sensible to take supervision away from the Reserve Bank and put it elsewhere. So, I mean...
so it's not that you've shifted, it's a perception of you, perhaps.
It's a perception of me that has shifted. Now, I wouldn't completely deny the fact that the great financial crisis, which was much worse, even though I'm sort of credited with seeing some of it coming, much worse than I anticipated, that has made me a little more skeptical about the rationality of some market participants or their incentive structures. But I think that's the subtle shift.
My last question to you, Governor, is that, I think addressing the alumni, Ahmedabad alumni in Bombay, you had said that when you'd been asked what your career choice would have been, you had said you'd like to be governor of the Reserve Bank of India. Now, having been governor for close to a year, if one were to go back in time and you were asked again, would you say the same thing?
Oh, it's a tremendously fulfilling experience. I think, when I was in academia, I said, I can't believe that somebody pays me to do this. I would say the same thing again, that it is a place where you feel that you palpably can make a difference. And so, absolutely.
No second thoughts about having sleepless nights?
Well, sleepless nights are not over the job. Sleepless nights are about actions that you have to take. But no, this is a great experience.
Great talking to you.
Thank you.
It's been really great. Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.